as a result of this tax, there's a risk of losing productivity, losing investment to the south of the border at a time where in 12 out of the last 15 quarters, our productivity numbers are down. We've virtually had almost no GDP growth.
And our GDP per capita, depending on which metric you use, is down 7 out of 8 quarters, which is really our income per Canada. And just to maybe further on that, what does your organization, what do your members think the impact of the capital gains tax will be on productivity and GDP per growth?
Right now, I don't think it doesn't help it at all right now. And I think right now, the fact is, going back to 2018, the level of productivity, we're back to where we were back then. And then we've had no growth. As I mentioned in my remarks, we're the second lowest in the OECD in terms of business investment. And when you look at the ease of doing business according to the World Bank, we were 6th in 2006. Now we're 23rd.
So we've got some difficulty. Speaking of ease of doing business, one of I think the underreported stories with respect to the capital gains exemption is how much more complicated that the government has made it. So, for example, if in fact you sell your business, you're going to pay at least 4 different inclusion rates and probably a couple of marginal rates of tax difference. So on one transaction, you could be paying tax at 6 or 7 different rates. Because you've got capital gains exemption, the 250K exemption, you've got the Canadian entrepreneurship, and then you've got the full rate. What's your organization's thoughts with respect to the current complicated state of the Income Tax Act and the capital gains increase and making it more complicated?
Well, we feel that the tax system is completely too complicated. It's why we've called for comprehensive tax reform. And I think having a Royal Commission to be able to develop on that and look at it and focus on outcomes-based measures. Right now, with the tax system as it is, SMEs are not encouraged to be able to grow and scale up. Right, they should be rewarded in terms of if you're willing to invest. And with how the Income Tax Act is structured right now, there's no incentive because then they're paying more taxes. Whereas when you go to another U.S. state with lower taxes, they're more incentivized on top of different incentives that they have made available with the Inflation Reduction Act and other avenues to help them do business.
One of the challenging or issues that I've seen that's most troublesome is actually not the technical provisions, but sort of the attitudinal direction of this government. You've heard this really ramped up, torqued up rhetoric about people who are successful, who are being demonized, business owners, job creators. Those are some of your members, and many of them aren't rich. If in fact, and I want to get those specifics here, so if in fact your members had more capital, isn't it correct, Mr. Greco, that they would use that money to create jobs, reinvest in the economy, and even make additional charitable donations?
It's not just jobs, it's also investment in machinery, equipment, and technology, particularly in manufacturing, be looking at automation. But this has to be a whole, it can't be a partisan affair. All different parties have to be able to come together to make this happen. If we don't have jobs, it affects Canadians in terms of getting there, whether an appliance delivered in Quebec or be able to get good essential goods they need in the event we have either future crises or just even simple food and other basics for Canadians to be able to deliver. So, yeah.
In the past, the Chamber of Commerce